Solana's impressive rally this past Friday is pushing past $183 after a near 15% weekly gain, has reignited speculation that Sol could soon eclipse the $200 mark. At the heart of this surge lies a record $9.71 billion in open interest OI on SOL futures. Up from $7.78 billion just days earlier, clear signal that fresh capital is rushing into Solana contracts and that trader conviction is mounting. A burgeoning eye often precedes significant price moves, as it indicates that more participants are willing to take on leverage and risk, underwriting further upside. Yet it also means that if prices falter, the unwinding of these positions could exacerbate sell-offs, as leveraged longs scramble to exit their trades. Complementing the derivatives boom is a steady rise in Solana's total value-locked TVL, which DeFi Llama pegs at $9.87 billion, its highest since early February. TVL growth reflects deeper ecosystem engagement. More users are depositing assets into decentralized exchanges, lending protocols, and staking solutions on Solana's network. A healthy TVL not only underpins fee revenue for validators and developers, but also signals that the network is becoming a serious competitor to Ethereum and other Layer 1 platforms. If this trend continues, the fundamental use case for Sol strengthens, as real-world activity aligns with speculative interest. However, a sudden decline in TVL, perhaps triggered by a smart contract exploit or rising transaction fees, could undercut the narrative of ecosystem vitality and leave SOL's upside story vulnerable. Technically, Solana's chart has been unmistakably bullish. After breaching daily resistance at $160 on Sunday and adding 9% through Thursday's close, Sol extended its rally into Friday, nearing the next key barrier at $184.13. A successful break and close above that level would likely open the door to the February 14th high at $205.34, a psychologically and technically significant milestone. Traders eye that level closely, aware that prior all-time highs often act as powerful magnets for momentum-based strategies. Yet those same levels can become formidable resistance, where profit-taking intensifies and stops are triggered. For break-even or marginal longs, it's causing choppy trading. On chart indicators bolster the bullish case. Daily RSI sits at 73, signaling strong momentum, but also caution as the market edges into overbought territory. Overbought readings can persist for extended periods in raging bull markets, yet they often precede periods of consolidation or pullback. The MACD Golden Cross from late June remains intact, with green histogram bars expanding above the zero line, an indication that buyers retain the upper hand in both trend and momentum. Still, divergences can form when price accelerates beyond the MACD's capacity to track, potentially foreshadowing hidden weakness. Beyond pure price action, broader market dynamics matter. Solana has attracted considerable institutional interest, with large funds and trading desks now offering Sol products alongside Bitcoin and Ethereum. This growing institutional footprint affords Solana improved liquidity and tighter bid-ask spreads, which support cleaner-up moves. Yet institutional participation can also dry up unexpectedly if macro conditions sour or if regulatory scrutiny intensifies. Solana's high throughput and low fees stand in contrast to Ethereum's congestion woes, but a regulatory crackdown on DeFi or NFT-esque drivers of Solana's TVL could stall both activity and price. Chain metrics hint at a potential correction even as they underpin the rally. Network transaction counts, while robust, have yet to surpass the all-time highs seen during the 2021 bull run, suggesting that broader network usage is still catching up to speculative interest. If price outpaces on-chain growth too rapidly, the disconnect can breed volatility. Traders may lament valuations detached from real utility, triggering swift rotations into more fundamentally grounded assets. Seasoned traders will also watch for market-wide risk factors. A sudden spike in U.S. Treasury yields or a surprise Federal Reserve hawkish shift could drain risk asset liquidity, prompting SOL to retrace. Likewise, a sharp drop in Bitcoin's price Solana often remains Correlated could pull altcoins lower even in otherwise strong market conditions. Global events, from geopolitical tensions to regulatory announcements from major jurisdictions, can swiftly alter investor sentiment and overshadow Solana's micro-fundamentals. Nevertheless, the $160 level holds as support during any short-term pullback. It could serve as a reliable springboard for renewed advances. The concept of former resistance becomes new support is critical here, a retest of $160 with diminishing volume, followed by a bounce, would validate the breakout and embolden bulls. In that scenario, momentum algorithms and discretionary traders alike could pile in, pushing SOL inexorably toward $200 and potentially beyond. Strategic risk management is essential. Traders might stagger entries around key technical junctures, acquiring scaled positions. Between $172 and $178, placing stop-loss orders just below $160 to contain downside if the breakout fails. More sophisticated players could employ call spreads or other option structures to harness upside while capping risk. Portfolio managers diversifying into Solana should consider position sizes that reflect their risk tolerance and the asset's volatility profile, guarding against the whipsaw effects that have defined past altcoin cycles. In the longer term, Solana's trajectory will hinge on its ability to sustain network growth, fend off smart contract exploits, and navigate regulatory headwinds. Ongoing developments such as new Layer 2 solutions, cross-chain bridges, and improved validator decentralization will deepen the network's value proposition. Yet competition from other high-throughput chains like Avalanche, Near, and soon, Ethereum scaling upgrades may temper Solana's market share. An aggressive expansion of TVL, diversified use cases, robust developer activity are vital to justify valuations well above $200. Ultimately, Solana's march toward $200 is backed by a confluence of bullish signals record, OI rising TVL, clean technical breakouts, and positive on-chain trends balanced against healthy reminders of risk. Overbought indicators, potential liquidity retracements, macro uncertainties, and competitive pressures. If SOL can clear $184 decisively and consolidate above it, the path to $205 and beyond becomes markedly easier, attracting fresh capital and reinforcing market psychology. Conversely, failure to hold key levels or negative external shocks could induce rapid retracements, reminding all participants that high-reward altcoins demand equally vigilant risk controls as the crypto landscape evolves. Solana's narrative remains one of high-speed innovation and broadening ecosystem momentum. Whether it can maintain its current upward velocity and cross the $200 threshold hinges on both its internal fundamentals and the wider market backdrop. By aligning strategic entries with robust risk management and staying attuned to macro and on-chain indicators, investors and traders can position themselves to harness Solana's next breakout or protect capital when the rally's initial momentum inevitably meets headwinds. In crypto, as in all markets, opportunity and risk travel in tandem, and Solana's journey to $200 will test the market's appetite for both.